Now the part of our show where we discuss three things that I think are important for individual investors to consider before you make your investment decisions. And here you have three of them right now in front of you. Trade deals and announcements. As we know, right now, President of the United States, along with Treasury Secretary Bessent and Marco Rubio and all of the individuals that are part of the administration, Jameson Greer, part of the trade team, trying to come out with trade deals between the United States and really the rest of the world. This is what we're talking about right now, what we've been talking about for quite some time. So once again, something to keep top of mind. Our second point, corporate earnings update. Corporate earnings season has kicked off over the last, let's call it, week or two, starting with the big banks in the United States, but now working their way to some of the big tech earnings as well. We've seen some big tech earnings coming out. We will get some more tech earnings this week. Names like Tesla and Google, some of the Mag 7 names will be reporting shortly. And we'll talk about how the corporate earnings season has fared so far. Managing expectations. Now, this is an interesting one. We've had this as a topic to focus on before. Here we are, right? Markets at our all-time highs. We are getting close to the end of July, and we'll be getting into August pretty soon. Historically, the months of August and September are challenging months for the stock market more often than not. And when you come in on a high, near all-time highs, 52-week highs, sometimes the market can struggle. Can struggle with individuals talking about things such as, is the market overvalued at this point in time, or at best fairly valued, and should we continue to see the growth that we've been seeing? So managing investors' expectations, managing your own investing expectations. Should you expect a bit of a pullback towards the end of August, beginning of September? It's quite possible. We'll have to see how the economic data plays out. We'll have to see how the tariff situation plays out, and a number of other factors will set the tone for the markets. So let's move on to our first topic, trade deal and trade deal announcements. So we know that it is about 1 week away, maybe a little bit more than a week away, August 1st. That is the deadline for tariffs, for the tariffs that the president has put back on many countries now. For those that haven't received their tariff rate as yet, haven't received the letter as yet, I believe the president is going to send kind of a blanket letter to the rest of the countries. I think that the U.S. has already sent a letter to their major trading partners. We have already heard what the tariff rates would be in places like the EU, places like Japan, South Korea, Canada, Mexico, the major trading partners for the United States. And these tariffs look to take place or to start as of August 1st. We've also heard tariffs on steel, aluminum, as we know, copper as well. So these sectoral tariffs on top of the country-specific tariffs. So we could actually see rates significantly higher in the coming days. And I guess overall, as an investor, you really want to, have one eye or ear on what's going on, what's coming out of Washington. You want to know whether a deal has been made. We've heard of deals with places like Vietnam, places like the UK, but we really haven't seen much in the way of deals with the U.S.'s major allies or trading partners. In Canada, we're working towards a deal before August 1st, and the hope is that we can get one. I know Prime Minister Carney has said that even if we get a deal with the U.S., it'll probably involve or still involve tariffs placed on what we send to the U.S., imports into the U.S. from Canada. It may be as low as 10%, 15, 20%, but there will still be a tariff, which I know Canada obviously is not too happy about. Our first chart here, we can take a look and see here. This shows you all the different tariff rates that the U.S. is now talking about implementing on different countries as of August 1st. You can see how right off the top, Indonesia, 19%. That deal has been, I think, announced most recently. Vietnam, 20%, used to be 46%. So the number on the left side was where it was beginning of April, and the new rate as of today. United Kingdom, the UK, even though they have struck a deal with the U.S., doesn't appear that their tariff rates have gone down any. It was 10%, and it is still 10% with the U.S. European Union, once upon a time, 20% as of April. Today, we're talking 30%. Mexico, Canada, as much as 35%. So you can clearly see here how the United States, in some cases, has actually put on higher tariff rates on certain countries than they had back at the beginning of April. Places like Japan at the bottom of our chart there, 25% tariff. In April, it was 24, and Malaysia, 25, and back in April, it was 24%. So, places like a European Union, we've heard them talking about how with that high of a tariff placed on Europe, if it were to go through on August 1st, that could possibly prevent the two regions, or I guess I would say countries, but as we know, the European Union is made up of 27 countries, but the European Union as a whole, preventing them from doing any kind of trade with the U.S. just in general. They're talking about with these high tariff rates, that could prevent all trade from happening. And, they said that, but yet again, the market didn't really respond. I think the market is anticipating a trade deal done between the U.S. and Europe. I think the market is anticipating a deal done between many countries, many of the United States' big trading partners and allies. And I think that's why we haven't really seen the market go down too much as yet. Recently, we saw a copy of what the President of the United States sent to Canada. It was a letter, the same letter that he has sent out to many countries. We actually have a copy of that letter we can actually show. There it is. I won't go through the whole letter, but President Trump starts off by saying, very politely and respectful, it has been a great honor for me to send this letter in that it demonstrates the strength and commitment of our trading relationship. Well, I don't know if Canada would think that that is the case, or any other country for that matter. It goes on to talk about, why the tariffs are being placed on Canada, whether it's fentanyl or whether it's because of, I guess, not allowing the U.S. to move into some of our markets, like the dairy markets. And at one point, the U.S. was upset about digital services tax, which has now been taken off. So there are a number of things that President of the United States was not happy with, as he says, not allowing us or not allowing the U.S. to get into our markets, having a deficit with the U.S. As we know, that's not necessarily the case. If you take away the energy component of that deficit, the U.S. is actually at a bit of a surplus. So a lot of the deficit was just mainly because of energy and because of oil. But that was the letter that the president sent to us. And one of the parts at the end, it says that if Canada were to reciprocate, were to increase tariffs on the U.S., then the U.S. has the right to increase further tariffs on Canada by as much as whatever Canada puts on the U.S. So basically, if we put 30% tariffs on the U.S., then tariffs will be increased by 30% more. So that's in that letter as well. We have a recent comment from Prime Minister Carney. You can see here, I believe this was on X, on Twitter, and he writes, throughout the current trade negotiations with the United States, the Canadian government has steadfastly defended our workers and businesses. We will continue to do so as we work towards the revised deadline of August 1st. He goes on to say, Canada has made vital progress to stop the scourge of fentanyl in North America. We are committed to continuing to work with the United States to save lives and protect communities in both countries. We are building Canada strong. Federal government and provinces and territories are making significant progress in building one Canadian economy. We are poised to build a series of major new projects in the national interest. We are strengthening our trading partnerships throughout the world. And we know that that's the idea, right? That's what Canada is trying to do. They're trying to forge relationships with other countries around the world. We're already hearing that things such as natural gas are being exported to places like Asia. So we are definitely trading less with the U.S. and trading more with other parts of the world, which is a great thing. And as I said, as investors, you want to keep an eye on what comes out of these trade negotiations, what the trade announcements are, and what Canada is going to be doing over the coming weeks. Our second topic that individual investors need to focus on before you make your investment decisions is this corporate earnings season. All the different corporations and businesses will report how they did in calendar or quarter two of 2025. How is business going? How are some of these businesses faring? And right now, for the most part, we've seen most of the major banks in the United States, big and some of the kind of mid-tier banks report earnings. Some of the regionals, super regionals, as we call them, have reported earnings, the PNCs of the world, for example. And for the most part, bank earnings season has kicked off in fine fashion. We've heard from companies like, for example, JP Morgan. We have a chart of JP Morgan, and they say that JP Morgan is doing just fine. A lot of money is being made. A lot of businesses are going public once again. JP Morgan is making a lot of money on trading, wealth management, lending once again. And their stock, as you can see, has definitely reflected what's going on with respect to JP Morgan, trading near or at all-time highs. And as I said, with a lot of trading in the IPO market going strong, or at least opening up again, things are going really well. Second bank stock I wanted to show, and this is Goldman Sachs. The chart of Goldman Sachs. When you hear of trading, investment income, IPOs, you got to look at Goldman Sachs, right? They're the leaders and biggest investment firm basically around. And when you hear about IPOs, companies going public, trading revenues, this only helps Goldman Sachs. We see their chart has been sort of flat, kind of flatlining near 52-week and actually all-time highs. And if you've held shares of Goldman Sachs, you've done extremely well. And corporate earnings season, as I said, was not a disappointment from the likes of Goldman Sachs or even a Morgan Stanley, another investment firm, or any of the major banks, Citibank, JP Morgan, Bank of America, Wells Fargo. All the major banks have done extremely well. A couple of tech names that have recently reported as well. We'll go to our first chart on tech, which is Taiwan Semiconductor. Taiwan Semiconductor, for those of you that don't recognize the name, Taiwan Semiconductor is the largest chip manufacturer in the world today. Now, some of you are saying, I thought that was NVIDIA. Well, NVIDIA creates the chips, and Taiwan Semi makes and builds the chips for companies like NVIDIA, companies like Apple, companies like AMD, and many other chip makers or chip creators, if you want to call them that. Taiwan Semi is the one that puts it all together and builds the chips for these companies. And they just reported earnings. Earnings were unbelievable. Growth in really stemming from AI, as you can imagine, data center, AI, growing earnings at a rapid rate, continuing to impress, continuing to take up expectations for future earnings. The stock just doesn't seem to quit. And the interesting thing for me for this stock is that no matter how well it has done, compared to some of the other names in the same space, like an NVIDIA now trading at 40 times earnings, or an AMD trading at 40 times earnings. These are forward earnings, I should say, forward earnings, earnings multiples trading at 40 times. TSMC, or Taiwan Semiconductor, is trading at just 24 times forward earnings. So I believe still can be looked at and still cheap or cheaper relative to some of these chip makers that many of you own today. Another tech name that we've grown to love over the last, few years now is Netflix. Now, this name is very interesting. You'll see here that the chart has had a good run, but somewhere around, let's call it third week of July, or sorry, not third week, but I guess third week of June, I should say. See the stock kind of selling off a little bit. Netflix beat on the top line, beat on the bottom line, earnings per share. The problem with Netflix is it has done so well that the expectations are just so high. And when you have a name like Netflix coming into an earnings report where expectations are very high, it is so difficult to meet those expectations. And what we saw with Netflix on the day they reported is we saw a bit of a sell-off in the name. Their subscriber growth was good, their earnings were good, their revenues were good, Their expectations going forward were a little disappointing, I think. I think some people wanted to see it a little bit better, but nonetheless, Netflix is firing on all cylinders, and it's just coming into this earnings report. I just think the expectations were far too high for a name like Netflix, and I think that's why they were a name that unfortunately didn't see a pop, even though many other names that have done just as well, or maybe not even as well as a Netflix, we saw their names move higher. So earnings season, earnings reports that are going to continue to come out. As I said, we're going to see the Mag 7, Tesla, Google coming out shortly in the next day or so. And these are companies that obviously we want to keep an eye on, the Mag 7 being such a huge part of the growth of the markets, of the economy right now. So earnings and earnings season is something investors want to keep an eye on. Our third point, or our third topic for individual investors to focus on, is this idea of managing expectations. And we talked about that off the top of the show. And, coming into this time at the end of July being one of the best months of the year, if you can believe it, for investors' returns, well, August and September are usually not such great months. And our first chart shows the S&P 500. We can see how well the S&P 500 is doing coming into August. As there we have it. You can see how it's clearly gone from the bottom left to the top right, from about middle of April to present day. There's a year-to-date chart. We are pretty much at all-time highs on the S&P, over 6,300. I know that the market has been a little bit volatile. This chart was taken actually yesterday. And so, it doesn't take into consideration how the markets closed yesterday and how the markets have fared this morning. So overall, S&P 500 coming into August on a high note, most definitely. Our next chart here shows the different sectors of the S&P 500. And you can see how many of the sectors are in the red. If you look at the middle column, YTD, or year to date, you can see that communication services up almost 11%. Information technology in the middle of the chart there, 11.88%. Utility sector, which is interesting. That's, I think, a lot to do with data center and all the energy that is needed to power these data centers. Perhaps that is causing the utility sector to move higher. They're up by almost 11% as well, but only a few sectors, right? Consumer discretionary, names like Nike having a difficult time this year and over the last few years. You have the healthcare sector, pharmaceuticals not doing so well, and energy sort of flat year to date. But most of these sectors are doing really well. And when you have that scenario, as you move into August, more often than not, August tends to be a bit of a flat month, and September tends to be a little bit more challenging. Our next chart here, which is nicely color coordinated, it shows you, there you have it. Take a look at July. I didn't realize how good the month of July historically is for investors. This is a chart showing the last 15 years or so. Look at how many times the month of July is green. Again, it's in the middle of the chart there. It's only pink, twice. There was one July in 2012 where the gains were just 1%. 2011, we saw a bit of a sell-off, and 2014. So July historically is a great month. You can see the average up top, 2.8%. That is really the second best month to November. November, the average rate of return is over 3%. But let's take a look at August and September. How much pink or do you see on the screen? And you can see that on average, August is slightly negative, and on average, September is almost down 1%. So we're not talking huge numbers or huge numbers to the downside, but definitely something that individual investors need to be mindful of. So as we continue to put more money to work, continue to buy good quality names, you want to continue to look for bargains, but just be mindful where we are in the calendar, where we are with respect to trading, S&P coming into this time of year at all-time highs. And I think you just need to be mindful of that as you make your investment decisions over the next few weeks.